So is the market put in a major bottom, or is another huge crash leg coming? Let's find out here today with our daily SPY analysis. Today is Monday, March 24th, 2025. Don't forget to give the video a thumbs up and subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts analysis and live day trading. Anyways, let's get into it here today. So markets say with a big gap and go. Spider's up 1.75 and the Qs, we can get that number to switch here. There we go, up 2%. So nice move there. 2.3% gain for the Russell, and Dow up 1.3. It is power hour now, so we're, it's not much consequence here if we inch up a little bit more into the 575 area like we talked about this morning in the short video. And you can see right there that, there's quite a bit of ODT interest up there. So they might try to push it up towards the end of the day. And, this is what we talked about. It's almost as if Options X matters, right? So everybody thought that this was a bear flag, not me, but everybody thought this was kind of bear flag action. And again, you got to go back to that. You just got to understand that it's not a coincidence that the market topped the day of expiration and it bottomed a week before March expiry. And it's also not a coincidence that it bottomed right at 55.65 on the 10th. That level being the JPM put collar. We did end up making slight lower lows. That's totally normal when you're looking for a bottom. As you like to get those shakeouts, those last stops run. And there's a couple of things here. Is there a low in place? It's very likely. It's very likely that's the case. The odds obviously are a lot higher now. But we could still come back down. One of the things I don't like right now is I like the price action. I just wish we didn't gap this much, right? I don't love the futures gap specifically. I don't care about the RTH gap. I care about the ETH gap. And there's one down here too. So usually, those like to fill. Generally, they don't always. Just so you know, and just to prove it to you, you can just look back here. Right, they don't always fill, and I think there's ones back at 2011 I can show you that they don't always fill, but I just don't really like it. That said, just on this short term, where we've been talking about we can go is 58.50. Right now, I already know without even having to look into the data, which I have, but I already know everybody is going to short right there. So that's my one concern, is it seems to be the consensus that we're just going to go up here, and then that's a slam dunk short, and then we're just going to come down here to 5400 SPX, and then that's the real low, right? That's the that's the level you want to be short at, right? That's just that's a no-brainer, right? That's an easy, and maybe that's what works, but from me, I'm just seeing that that's sort of the consensus. Everybody wants to do that. I've said previously too that the new pain trade might just be up when the market bottoms, and I think that's increasingly a possibility. Couple of things here too. It's 3 o'clock. We're almost at 90% up day. If we close at 90% up day, that is 3 out of the last 7 of 90% up day. I don't know if somebody can tell me in the comments what the statistics are but you're seeing a massive breadth thrust here. Right, and we know the bears love ragging on the breadth. So there's your breadth move. RSP up 1.39 here today. QQ equal weight up 2%, at parity perfectly with the triple Qs. So it's not a breadth problem here. You're also seeing the Forex market confirm the move. We talked about the inverse head and shoulders last week with the dollar yen, and beautiful breakout here. So that should take us up to, if that pattern plays out and does not fail. It's not exactly perfect. It doesn't matter though. There it is, 90-degree angle. It could take us up to 154. So that would be a tailwind for risk assets. So at least in the short term, which is all we really care about, we can look for some continued upside. Again, at least into, I'd say 58.25. Every bear market rally is going to give you, again, if this is even a bear market. But every bear market rally is going to give you at least a 50% retrace. Usually a 620. Usually the first retrace. And here's another reason why I think we could go maybe higher, maybe even to 59. It's because I know everyone's going to short this. I already saw them shorting this morning. We could see it in the flows this morning. I said, in the trading room, I was like, I was like, I would short 57.50 today because it's got some gamma there, but let's look for a few points higher here today. And we got a whopping 1 10-minute candle pullback off of it. So I already know shorts are eager right now, but you got to understand there's a reason why I say the things I say. It's a mechanical move here. These are market makers covering, right? They don't need those short positions anymore. Why? Because the options contract doesn't exist. So why would they hold the shorts? So that's why it's putting that upward pressure here on the market. Not something you want to fight. Another thing you don't want to fight, and I've seen people fight this today too, like Tesla here. Dude, this is a failed bear inside bar. Don't get in front of that. Like look at this weekly. This is, two hammers in a row, big volume there. You gapped above everybody who shorted here is underwater. Triple Qs. Everybody who shorted here the last 10 days is underwater. Right? That look at Amazon here. Gapping above the 200, that's usually a sign of strength here. So I think that if you want to short, I'm not saying you can't do 5,800 or 5,825, but leave some room because it could go to 59 very easily. I mean, usually the first leg of any bear is going to get you a 618, like minimum 50% retrace. But a lot of the time it can go to the 618. Sometimes it goes to a 786. All right, and this was not even a big like this was just a pullback, right? This 2023 action. It went to a 786 essentially. Went to like a 75% retrace. Right? That wasn't even a bear market. That was just a pullback into the fall. Right? So usually those I mean, what was that, like a 4.5% decline on that first leg? This was 10 in one shot with no bounces. So that's why I say be careful shorting, be careful getting early to short here, because this move has not run its course yet, in my opinion. So I'm not saying we're going to go straight up. I think we'll run into some headwinds around Wednesday, maybe Thursday, but yeah, I wouldn't get in front of this just now. Good move on ES. We talked about the trend line, gap right above it. It's back above the 20 DMA. And, maybe that wants to go to 59 even, right? I mean, you got the pivots down here. You got this big area, and then you got a couple of them above that, and then there's the 200. So ES might want to go test that as well. NQ above key level 2, above 20,003. And then you've got a trend line up there also. So, I mean, don't be jumping into short right now. I don't think it's a good idea until at least like end of quarter. Maybe, yeah, maybe middle of the week. We'll see. But we're in positive gamma really all week. There is a little bit of negativity for next Monday, but that's it. So good move here. And yeah, we'll just leave it at that. SPY, we talked about this over and over. Said, look, bear control, bear control, bear control, bear control. So we're above 570, and we are. And that's not even including the dividend. So it's actually more like 571, 572. But if we look at SPX, you can see we're clearly above 57 even. We got a gap there. We got another gap there too. But 58.25 looks like kind of the spot right now. The Qs here, we're into the 490 handle. We're trying to push through that. You can see the 200 MA here at 495, and then obviously the whole round number at 5 bills. And yeah, maybe a little bit above that at 503. So some give or take. We'll have to go off of SPX and see where the Qs are at when they're hitting their numbers too. IWM here, I know I talked about 215 a week ago as a possibility. I think that's real. I see this. I see the interest there for this Friday, and I mean, again, your 50% retrace is at 215 now. You might say, well, it's too far away. How can it go that high? I mean, well, it sold off that much without bouncing. So yeah, it can go back there and retest the breakdown. I mean, that would be a very normal, like that's routine price activity, right? So don't get things confused there. But there's 215. There's really nothing saying it can't go back there. Diamond here, we can type the diamond in right there. We go 1.4. And again, gapping up above that big 420, 423 is it? Yeah, 423 level. So again, a lot of things just clearing resistance. And when you see those gaps above, I did a whole video on this like a few months back, but when you see a gap above a major resistance, like just don't fight. Like and I could see it in the tape this morning. People were trying to fight this. And in the middle of the day, they're trying to fight the midday chop. You just wait a few days, like let it run its course here before you try to fade this. So, but yeah, good move for the market. SMH up 3. closing above last week's high, or at least it should. IGV, this is another one. Again, I mean, beautiful flag pattern, gapping through both of those moving averages. Don't get in the way of that. And you might say, well, we already sold off now, so we're in a bear market. But you got to zoom out. Look what you're going into, right? This is getting defended. Buyers are going to continue showing up here for a little bit. And then, even then, if we start reclaiming some of these levels, bears are going to be on defense. So you never know here. Beautiful liquidity grab last Friday. We talked about that. Nice follow through on the transports. So up 2% here. And, real big level, 15.2 to 15.3. And then the big level will be around 15.7 to 8 in that trend line there on DJT. We also had interest rates today continuing higher. And there's Bitcoin obviously acting well too. But yield curve's kind of flat here. 3-month 10-year actually uninverted quite a bit, but there was nothing really horrible here. And again, there's big recession fear right now. So yields up, probably not a bad thing here in the near term. 10s, 30s right back up too. So, I mean, we can talk about the tariff headline. I mean, I know someone's in the comments be like, Aaron, the only reason the market was up today was because of the tariff. We've been getting headlines every day. Some of them are good, some of them are bad, and the market hasn't moved, right? It's moving now because Gamma is unclenched, right? Don't kid yourself. The news is secondary. But in any case, we had, headlines this morning, the market reacted positive. And there's concern about recession right now. Yields are up. That's helping calm that down. XHB up 2.52. It's still not the greatest bounce, so I don't love home builders. I'll tell you that. I mean, we've got a nice hit off of 97.50 like we talked about. It's above that right now, but it's got a lot of work to do. So we got to clear last week's high. Got to clear 102, 102.50, but it's up today. We'll give it that. VNQ here up 1.4. Again, still has an inside bar there, but it is lagging, right? It's still behind last week's high. We also had defensives here. XLV, that's still a good pattern there, but kind of lagging today. XLP, I think this and XLU, I think paid dividends today because it's showing it's flat, and XLP showing it's flat. But again, defensives down, tech up, that's fine. We don't care. We're fine with that. XLF up 1.7, higher high. Again, financials, they're usually a good canary, and they've been strong lately, which has been helping us keep us on the right side of the trade instead of panicking into the lows like a lot of people. KRE up 2.7, reclaiming to 200 in the 20. So if that can continue up, we're looking at $59.50 to $60. And KBE here, again, up about the same kind of chart there. Broker dealers led really nicely today. And next level is 860, maybe 880. Oil strong today too. Again, doesn't look like a recession here. Up 91 cents. Again, a lot of oil shorts, right? So when we see these things, it's of interest here. We're almost to our $70 target, but I think we can go to 72. So oil up nicely. We had XLE up as well, up less, but again, with tech, with XLK leading, that's fine. We're okay with XLE being a little bit of a laggard. XOP, again, up 1.25. OIH, nice move there too, up 1.9. We had nat gas here, flat to lower, nothing really too eventful going on there. And then we had the dollar up today as well. That's still got a lot of work to do to get back to 105, but it's trying here. Yen is certainly helping out. Euro coming down too. Gold backing off again. I think this is also positive for the market. It's a little bit more of a risk-on signal. It's something you'd see with a big up day like today. But there's no sell signal really on gold just yet. So this is just a mild pullback. This can go right back up if it needs to. And I think it's got one more push in it too. But it is very top heavy. It's getting close here. Silver, same thing, although I think silver has another bigger run in it. Platinum down. I'm not interested in either of these, platinum or palladium. Maybe palladium could curl up here, but I don't love the chart enough to play it. And then we got copper here stalling out after making a new high. So again, a lot of supply up here. We'll see if that stalls it out. Bitcoin, again, acting well. Nothing great. I mean, it's up 3%. You got the higher high. That's good. We'll give it the upside bias to 91.5 to 92. Alts having a good day. Doge up 10. ETH up 4.34. These all look like crap, though. They still do not look very good. But, you know, they're holding up right now. We'll give them that. So I just give Bitcoin the upside bias to 91.5 to 92. Spiders here trying to inch up. We'll see if they make a run at 575. We should get there, I mean, tomorrow if we don't. Volatility getting hit again, obviously, today. So really all boxes checked. Look at the VVIX. I mean, this is below the December low now, isn't it? Yeah, this is below the December low. So it doesn't really look like a bear market to me. Everybody keeps telling me it is, but I don't know about that. So that's below that December low. And we're now going into the July levels. I've got numbers done on the VIX already, and we're not there yet. So I'll just say that. But anyway, markets here, good day, good gap and go, nice squeeze. Every sell-off is accompanied by a short squeeze. We'll probably get a little bit more out of this, and we'll just assess it from there and not be perma anything. We'll just look to take advantage of whatever side of the trade we can. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find me on carnivoretrades.com. I will see you guys all tomorrow.